So yesterday, the stock market exploded, with the NASDAQ 100 pumping over 12% in one day. That's the biggest single-day increase since the financial crisis 2008. But what actually causes these kind of moves? Well, a massive reason is a concept called short squeeze. And in this video, I will break down exactly what a short squeeze is, how it works, and how you can spot them before they happen to make money. But right, so before we can understand what a short squeeze is, we first just need to take a quick look at what short selling means. And in simple terms, short selling is basically that you bet that the stock will go down. So you basically earn money when the stock goes down. And how this works is that you borrow shares, you sell them now, and you hope to buy them back later at a cheaper price. Don't worry, I will show you guys an example very soon. And the profit here comes if the stock price or crypto price or whatever drops after you sell. So how does short selling work? Well, here is a pretty silly example, but it will hopefully make you understand. So think of it like this. First of all, let's say that you borrow your friend's car. But then what you do here is that you sell the car immediately for $10,000. And perhaps your friend doesn't even know about this, but what you're basically doing is that you're betting that soon the same model, the exact same car, will drop to $7,000, so you can buy back the car, return the car to your friend, and then keep the $3,000 profit. Because remember, you sold it for $10,000 and you bought it back for $7,000, so that's a $3,000 profit. If you still don't really get short selling, I actually have a full video on short selling, so I actually highly recommend to check that one out if the concept is still unclear. But now to the main topic of this video. What is a short squeeze? Well, in simple terms, a short squeeze happens when a stock price rises sharply at the same time when many traders are short. And why does this happen? Well, short sellers are forced to buy back shares quickly to cut their losses. So think about this example with the car. We sold the car immediately for $10,000 because we thought the car would go down to $7,000, right? But what happens here if the price starts going up in price? Maybe you only have like, let's say $15,000 in your bank account, and you know you have to return the car to your friend. So if the prices of cars start to go up to maybe like 14,000, you're actually forced to buy a car because you have to return the car if you want to save your friendship. So this can basically lead to something called panic buying. You might have heard of panic selling, but have you heard about panic buying? That's definitely what we saw in the market yesterday. The stock market was absolutely crazy yesterday, April 9th. But this leads to even more buying pressure, pushing the price even higher. So it's basically a cycle. So the price goes up, leading to that short sellers need to cover, or in other words, buy back what they sold, which leads to even more buying pressure, which leads to even more short sellers having to cover, leading to even more buying pressure, and so on and so on. So a short squeeze is this cycle that just leads to higher and higher prices. So this is basically what I just said. It's a feedback loop. The price goes up, shorts have to buy, price goes up even more shorts buy, and then the cycle repeats. So the result here is that the stock can explode towards the upside, or as we saw yesterday, a whole stock market index can explode. But okay, so now let's take a look at some real life examples of sort of famous short squeezes. And the first one you might have heard about, or you probably even have if you are, in the stock market space or trading space, and that is GameStop 2021. This was a case where hedge funds were super short GameStop, over 140%. This is an a crazy amount of number that we will actually talk about later on when we take a look at how to find these opportunities. But basically, Reddit traders from Wall Street Bets, that's a specific subreddit, basically started the squeeze. And when the cycle actually starts, it's very hard to stop. So the price went from around $17 to almost $500, and the short sellers lost billions. All right, so now we are in TradingView and we're looking at GameStop. And as you can see right here, this was the massive, massive short squeeze. If we take a look at, the price increase, the price range from the start here to the very high, we can see that we had an increase of around $50 or 500%. So it was a massive, massive move. So this right here is a great example of how, the short squeeze, something starts the short squeeze. In this case, it was a subreddit. And once the cycle had started, it was very, very hard to stop. And eventually, when the cycle eventually broke, and as you can see, what usually follows a short squeeze is a massive, massive decline. But you can see that the new sort of base level was actually higher compared to prior, before the short squeeze. Right here is another super famous example. This right here is Volkswagen, and here we are looking back in 2008 when we saw a crazy short squeeze on Volkswagen. You can see here, if we take a look at the total price increase here from the very low to high, we can see that it's pretty similar to the GameStop move. Right here we have a move of around 400%, but the exact same principle applies. Something sparks the short squeeze, and once the cycle has started, it's very, very hard to stop. And one very fun fact about this particular short squeeze was that for a brief moment when this happened, when Volkswagen reached almost 1,000 euro, it was actually the most valuable company in the world. Completely insane. But now let's take a look at what actually happened yesterday, or in other words, on April 9th, 2025. Well, yesterday we saw a historic stock market rally. I think this was the largest rally since 2008 and one of the largest rallies since 1950, where the S&P 500 went up around 10%, the NASDAQ around 12%, and what started this was that Trump is now pausing tariffs for 90 days. So this led to a very strong move towards the upside. And because the market has been so, it has been so much fear in the market lately, many people have been shorting the market to either hedge or, protect their portfolio. As I already mentioned, if you want to learn more about this, watch my video about shorting. I also highly recommend to watch, if you don't know what a tariff is, I do have a video about that as well, and I will make sure to link it in the video card and description. In this kind of market, you have to know what a tariff is. But basically, as I said, many traders were short, which led to forced buybacks, which led to a market-wide short squeeze. And to put this in perspective here, a 9.5% increase is pretty much what the S&P 500 is expected to gain in 1 year, and this happened in 1 day. It's actually described as one of the greatest short squeezes of all time, so this one is definitely taking a place in the Hall of Fame. But alright, so here are some very important concepts and terms you need to know about short squeezes. The first concept you need to know about is something called short interest, and this is basically how many percentage of the shares are shorted. And when this number is high, it means that many traders are betting against the stock. And generally, short interest above 20 is considered very high. But in the case of GameStop, it had actually 140% short interest. And you might wonder, how is that even possible? Well, I don't really have time to go into detail about that in today's video, but you hopefully, understand how insane that was. But now the next important concept you need to know is something called days to cover. And this is basically how long it would take for shorts to exit. And When we have a high number, this is in general higher squeeze potential. So the calculation here is basically the short interest divided by the average daily trading volume. So we take a look at how much are usually traded in these stocks, and assuming this volume will continue, how long would it take for shorts to cover? So in general, values over 5 days are considered significant. Two more important terms here. One is float, and these are the shares available to trade. In general, low float, easier to squeeze, and fewer available shares means short have basically fewer escape options during a price spike. Last but definitely not least, this is something I have been perhaps even mentioning in this video without realizing. Covering is basically the process of buying back stock. Remember the car example I talked about earlier? When we buy back the car, we're basically covering our position. So covering basically means buying back shares to close a short position, to not be short anymore. And here, yet another sort of bonus term is a gamma squeeze. This is a similar concept, but for options trading. So this is when option sellers buy shares to hedge, adding to buying pressure. But now then, last but definitely not least, this is probably a big reason you clicked on this video. How do we spot short squeezes early? So how can we spot these potential squeezes to actually make money? First of all, you want to look out for high short interest. And if you don't know short interest, if you for some reason skipped earlier part of this video, make sure to watch it. The same thing is true with high days to cover. We're looking for stocks or cryptocurrencies with lots of days to cover, because the more days it would take shorts to exit, the higher the squeeze risk, or for us, maybe squeeze potential. Another thing to look out for is low float. So fewer tradable shares or assets means easier to push the price up fast. Another thing to definitely look out for is sudden price spikes or news. And you want to look out for this, especially in the stocks that have these other factors we talked about earlier, right? So sudden price spikes or news can definitely force shorts to cover. And this is exactly what happened yesterday, April 9th. The announcement from Trump on Truth Social that he will pause the tariffs was a massive news event that started this cycle, right? Another thing to look out for is just unusual volume and hype. Rising volume, retail buzz on platforms like Reddit and Twitter should not be underestimated. Remember the case, remember GameStop? It all started from Reddit. So definitely don't ignore social media hype. It can be insane. So last but not least, if these aligns, a squeeze could be coming. But remember here that squeezes are in general hard to predict. If they were easy to predict, they wouldn't really happen, right? That's one of the concepts. But nevertheless, if you have watched this video, you are probably knowing more about short squeezes than 99% of people. So you are already ahead. And by the way, guys, if you like what I do here on the channel and want to get access to exclusive videos, you will get access to exclusive presentations like this one on other trading concepts and economic concepts. Please consider joining our YouTube community and become a channel member. We have an amazing community here on YouTube where we, learn from each other and navigate these crazy times together. So yeah, I would love to see some of you guys in the community. But now, in order to trade short squeezes effectively, it's super important to have a strong foundation of how short selling works. So I highly recommend all of you to check out this video next.